Luxury homes are getting all the buzz lately. It's not just where we are in Toronto, it's actually all across Canada, down to our neighbors in New York, San Francisco, and even halfway across the world in Hong Kong. But let's go back to Toronto. Average Toronto semis have gone up in Q1 and then back down, and now as of July's data, Toronto semis are sitting at a modest 2% year-on-year growth. Average Toronto condos have done a bit better, hanging on to its prices, mainly because it was so hard hit already, and so now they're at 5% higher than the prices seen in July of 2020. Now, luxury houses in Toronto have gone up by a whopping 26% since last July, and so they definitely take the prize for the best appreciation in Toronto over the past year. In this video, let's dig into what's happening in the Toronto luxury market, and hopefully we can help you make better decisions as a real estate investor. If you like content like this, please give us a thumbs up, and don't forget to subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. I glossed over the numbers just before, but here is a closer look. Toronto semis are up 2% year on year. Toronto condos as a whole is up 5% year on year. And I actually want to split luxury homes in Toronto into two parts. For this video, I'll classify luxury homes in Toronto as detached houses in central Toronto from C1 to C15, where average home prices are currently at over $2.5 million. And this group has seen a 26% year-on-year growth since last July. Now, on the other hand, luxury condos have actually been the worst performer. Condos in the C2 area have the highest average price at over $1 million, and they saw a 20% decline over the past year. So to be accurate, the best performer in Toronto is not just luxury homes, but specifically luxury houses in Toronto. When you look at analyst reports as to why luxury homes have been doing so well, the reason is pretty much the same across the globe. The pandemic has caused a bigger disparity between the rich and the poor. Now, the rich are becoming much richer because of great stock performance, record low borrowing rates, and they're generally very cash rich. On top of this, everyone is valuing real estate a lot more now because we need to be at home more, so the wealthy are now shifting more of their money into real estate. I always go back to my favorite sales to new listings ratio to get a better idea of real estate trends, and a higher ratio indicates a hotter market. And when we look at the ratio for luxury houses in Toronto, you can see that it's been holding stable at a higher level for the past 6 months compared to its long-term average. And this aligns with why we have been seeing a much hotter luxury house market in Toronto. Now, if you compare this to the ratio for semis and condos, you can see that they have been dropping over the past 6 months, and the ratio is actually back to its long-term average for semis, which is why we've been seeing the slowest price growth in the Toronto semi market. If we zoom out more, you can see that over the past 10 years, luxury houses have typically not been as hot as the general market, with the lower sales to new listings ratio compared to semis and condos. And the reason is simple. There's just simply less luxury house buyers out there. Now, the more interesting thing that I did notice is that even with less players, the average appreciation has been comparable to semis in Toronto and much better than condos. But again, it's also important to note that there are much stronger swings in the luxury market, so luxury homes become less attractive when you factor in risk-adjusted returns. Here's the reason. It's a fact that markets with more end-user buyers tend to have more price fluctuations because there's more emotional buying. Now, luxury homes don't make the best investment properties because rent yields aren't great, so they actually consist of mostly end-user buyers. But when end-user buyers are the most wealthy bunch, it appears that price fluctuations get even more exaggerated. In the news, they explain that luxury buyers are generally incredibly successful and not used to losing. The mentality is all about outbidding everyone else and being able to win, so this mindset continues to feed the luxury market frenzy. Now let's bring it all back and explain what this means for you. Well, luxury homes can be a great asset to hold, especially if it is your principal residence, because it can offer great long-term returns, the best tax advantages with no capital gains tax, combined with low borrowing rates and great leverage. Just remember that this is not the same case for luxury condos, especially if you're coming at it from an investment perspective. Luxury condos have the lowest rent yields, the lowest average appreciation, and once you factor in much higher volatility, the risk-adjusted returns just don't look great at all. Now, luxury houses have been doing very well over the last year, and because there's still uncertainty with COVID as I speak, this continues to translate to higher growth potential in stocks, interest rates remaining low for a while, and people still wanting bigger homes, and all of these continue to prop up the luxury house prices. Having said that, the luxury house market is hotter than normal, and it's not going to stay this way forever. I expect prices to start to cool when we see an indication of rates coming up and stocks starting to stabilize. Now, if you're strictly searching for investment opportunities, I'd recommend not looking at average returns, but rather risk-adjusted average returns, which will give you a better idea of how much you'll be able to make by factoring in added risk. And when you do this, you'll see that Toronto semis do outperform the rest in the long run and would be best from strictly an investment standpoint. We're experts in investing in real estate in Toronto, so if you want to figure out what's right for your specific situation, we're ready for you. We can look at your requirements and your preferences and then match you up with the best opportunity that fits your needs. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us to learn more about our services. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.